You know, the price of cement in Nigeria today is, I think, under 10,000 naira per bag. So if you take 10,000 naira, the prevailing exchange rate per ton will be about 200,000 naira, and the exchange rate of 1,516, we're looking at $110, $120. So the biggest issue we have is that, yes, I agree that the price of cement at 10,000 naira per bag seems a bit high, based on what we had a few years ago. But really, it is not that high, because at $120 per ton, because that is what it is. The price is not very expensive, because if you go around all over, you see that the average price per ton is between $130 to $150 per ton globally. The biggest issue we're having, even though we have local raw materials like gypsum, like limestone and other things, but the major costs like energy, gas, they are all paid in, even though in dollars, but in naira, but more or less in dollars. They just convert the exchange rate. So that is what has been the problem. But we have been trying to ensure that we maintain the price of cement at not higher than what it is today, because you also have costs. But what we are also trying to do is to see how we can reduce our OPEX, so that with that we can now maybe transfer the savings to to the market. But that may take a bit of time. So yes, we are conscious of the fact that we are trying to support the government and all of that. But then again, the cost is the major, our OPEX is the major issue. Because if you look at the investments we have made in the cement sector between Dangote Group and BUA Group, there is no company that has invested as much as we have in the last 10 years in the cement industry, or in any manufacturing sector. I mean, manufacturing in Nigeria, because the investment of over $5-6 billion is a lot of money. So with that, we really need to ensure that there is return on investment, because we have shareholders. And I know a lot of people or shareholders were even complaining that the profit after tax has not been, and I think it was BC that asked, it's been marginal. But we are trying to see how we can improve on that, and also at the same time ensure that we do not have high price of cement. You also wanted to know what plans we had for expansion. We are having a line that will be commissioned, inshallah, in the next couple of years, or so, 3 million tons. So that is an additional line, and with that, we'll be having about 20 million tons once that is completed. God willing. He also suggested that we should have like maybe a support fund for our shareholders, and I think you are right. We'll look, discuss with the management and the board to see how we can, do something to support, our shareholders. I don't know, but we'll discuss it and we'll really look into it and see, what we can do. Yusuf, I think we should look at that. Okay? Mrs. Bakari, you are saying that our tax for last year was not as impressive as you would want it to be, right? Well, let me promise you, this year is going to be much better. The reason being is that last year we had a lot of FX losses, which we had to pay, and over time, yes, 92, yeah, the MD is just informing me that we had 92 billion naira FX loss last year. So that is why our profit last year was not as impressive. But this year is going to be probably 3-4 times what we did last year, from what we have seen. God willing. And then again, I just mentioned that we are expanding, and we have a new line also coming up early 2027, it's 3 million tons. So with that, we'll be having 20 million tons installed capacity. On the CNG trucks, I don't know whether you are aware, we have a plan that we're commissioning sometime next year also for LNG, and with that, we are going to have CNG trucks. So we are already discussing, and I think before the end of the year, we'll place orders for the CNG trucks, because we already have this mini LNG plant that we are setting up, not far from Obu plant. And with that, it will be much easier for us, to have our CNG trucks. I share your concern as regards the capacity utilization, which is something we've, been discussing with the management. I think part of the reason is because, we have a new entrant, and it is becoming a bit of an issue to address that. But then again, the capacity, cement, production capacity in Nigeria is huge. If you look at Dangote, Lafarge, BUA, and Mangal, the installed capacity is much more than, the demand, in the country. So that is part of the problem. But then again, because of the quality of BUA cement, it is a preferred product in the market. We are still, seeing traction, and I think, that is going to improve in the very near future. Last year, our FX loss was 92 billion. This year, it has come down significantly, and I don't think we'll have much FX loss this year, right? Hence, why we believe that this year we are looking to do probably maybe about 300 billion naira profit after tax. What did you do? It's the first half of the year.
First quarter was 81. We are going to release the
Okay, first quarter 81 billion. So annualized, you are looking at over 250 billion. That is what we hope to get. And that is because, we had to provide quite a lot of money last year in terms of FX losses, which I think, it was 92 billion. And, going forward, in terms of energy costs, it is also going to come down. Again, as I mentioned, we are going to have our mini LNG plant that will be commissioned, inshallah, early next year. And with that, we'll see a substantial reduction in terms of costs. And then we have also, I don't know whether shareholders are aware, we signed a contract for a solar power, 20 megawatts for Sokoto. That was signed a couple of months ago in China. And that project was signed, and I think, they should be delivering that by next year. So that is also going to help support our, bringing down our energy costs going forward. So we are doing quite a lot of things to ensure that our OPEX is down. Hence why, as I said earlier, this year we're looking at over 250 billion naira profit after tax. And that is because, one, we've had a lot of FX losses, and also we are concentrating, ensuring that our energy costs and other OPEX are much lower than, what we were having before.